The 2026 Annual Shareholders Meeting of Robinsons Land Corporation will now begin. Ladies and gentlemen, please rise for the Philippine National Anthem.
Good morning, ladies and gentlemen. I am pleased to welcome you all to the 2026 Annual Shareholders Meeting of Robinsons Land Corporation. May I request the Corporate Secretary, Attorney Juan Antonio Evangelista, to introduce the members of the board present for today's meeting.
Good morning, Mr. Chairman. Allow me to introduce the members of the Board of Directors present for the Annual Shareholders Meeting. Our Chairman Emeritus, Mr. James L. Go. Our Chairman, Mr. Lance Y. Gokongwei. Director Rubina Gokongwei-Te. Director Patrick Henry C. Go. Director Johnson Robert G. Go Jr. Director Maria Socorro Isabel V. Aragon Gobio. Director Bienvenido S. Bautista. Director Jose T. Pardo. And also joining us online, Director Mary Grace Paul Yamanzares.
Thank you. May I now request the Corporate Secretary to please certify the sending of notices to the shareholders and to the existence of a quorum for this meeting.
Mr. Chairman, I hereby certify that notice of this meeting had been sent to the shareholders of record as of March 30, 2026 via the following methods. First, by publication in the Manila Standard and Business Mirror for 2 consecutive days on both online and print formats. Second, by posting on the website of the corporation. And lastly, by disclosure to the Philippine Stock Exchange. Thus, the shareholders have been notified of this meeting in compliance with the applicable rules and regulations. I hereby certify that there are present at this meeting, via remote communication or by proxy, shareholders entitled to vote representing 89.47% of the corporation's total outstanding shares, and that this meeting is therefore competent to transact the business provided for in the agenda. A quorum is present, Mr. Chairman.
There being a quorum, the annual meeting of the shareholders of Robinsons Land Corporation is hereby called to order. May I request the Corporate Secretary to share with us the rules and procedures for this meeting.
The rules and procedures are set forth in the definitive information statement and in the explanation of agenda items integrated into the notice of this meeting. All tabulation results for this meeting are subject to validation by CICIP, Gores, Velayo and Company, and the final voting results will be reflected in the minutes of today's meeting. For the information of the shareholders who are with us now during this meeting, the corporation has requested shareholders to send their questions or comments by email. Questions which were received by May 6, 2026 have been collated, and selected questions will be answered later on. The corporation will reply to the questions and comments not taken up during this meeting through email.
Let's now proceed to the next item on the agenda, the approval of the minutes of the 2025 annual meeting of the shareholders.
Mr. Chairman, copies of the minutes have been distributed to the shareholders by providing the link to the said minutes in the information statement and by showing a QR code on the screen prior to the meeting.
Good morning, Mr. Chairman. I am Attorney Cassandra Arnaldo. Inasmuch as copies of the minutes have been given to the shareholders present, I move that the reading of the minutes be waived and that the minutes be approved as submitted.
Good morning, Mr. Chairman. I'm Elijah Lantaon and I second the motion.
Thank you. The minutes are hereby approved as presented. We will now proceed with the presentation of the annual report and approval of the financial statements for the preceding year. We would like to call on our President and Chief Executive of Robinsons Land, Maybel Aragon Gobio, to present her report.
Mabuhay, a pleasant day to the members of our board, fellow shareholders and guests. Today, I am pleased to present our financial and operational performance, as well as the strategic initiatives that position us to sustain value creation in the years ahead. Robinsons Land Corporation had a strong year in 2025, marked by a steady performance and continued progress on key fronts. During the year, we introduced Vision 5-25-50, which is our 5-year strategic roadmap to deliver 25 billion pesos in net income by our 50th year or the year 2030. This vision is grounded in how we have always run the business, with prudence, discipline, and a focus on creating enduring value. We are pursuing this through 5 strategic levers. The first is expanding and diversifying our investment portfolio to strengthen recurring income. Second, unlocking capital through active asset monetization. Third, premiumizing our brands across business units while remaining accessible. Fourth, forging strategic partnerships to scale efficiently. And fifth, creating a better overall experience for our customers by introducing new offerings and business streams. Vision 5-25-50 is a sharper expression of who we are and how we intend to grow, steadily, responsibly, and with consistency through cycles. As of end 2025, RLC's extensive and diversified portfolio stands as a clear testament to a company designed for long-term institutional strength. Our developments span 57 malls, 34 office buildings, 16 work-able centers, 27 hotels and resorts, 15 industrial facilities, 134 residential developments, and 33 destination estates. Together, these well-balanced developments underscore RLC's ability to generate sustainable returns, withstand market down cycles, and continuously drive long-term land value creation and integrated community development. Now let us turn to our company's financial performance highlights. Our priority has always been to grow without compromising financial stability, and last year's numbers bear that out. RLC maintains a strong financial position with total assets at 275 billion pesos, which includes approximately 10.97 billion pesos in cash reserves. Shareholders' equity stood at 184.6 billion pesos, while our total outstanding debt was at 39.53 billion pesos and net debt at 28.56 billion pesos, resulting in a net debt-to-equity ratio of 16.27%. Earnings per share reached 2 pesos and 80 centavos, a 3% increase from the same period last year. Our net book value per share as of end of year was at 36 pesos and 53 centavos, indicating that the company's intrinsic value significantly exceeds its market valuation. The market today values capital agility as much as organizational strength. RLC continues to define this balance, merging the dynamic upside of a growth stock with the balance sheet integrity and margin consistency of a foundational market leader. In an economic climate marked by uncertainty, RLC continues to offer what matters most to Filipinos: stability, reliability, and the confidence of solid ground. These are proof points of a company built to endure. As part of RLC's Vision 5-25-50, we continuously unlock value through active asset monetization while preserving long-term stability, ensuring financial resilience and sustainable growth for our shareholders. In April and September 2025, RLC successfully completed 2 block placements of shares in RL Commercial REIT or RCR, raising a total of 13.96 billion pesos. Both transactions received strong investor demand, with the first tranche 1.8 times oversubscribed and the second tranche 3.7 times oversubscribed, reflecting strong market confidence in the quality of RCR's portfolio and its long-term growth prospects. The placements attracted a diversified base of both domestic and international investors, further enhancing the liquidity and public ownership of RCR. These successful transactions reinforce RCR's position as one of the largest and most liquid REITs in the Philippine market, while also strengthening RLC's balance sheet and providing additional capital to support our future growth initiatives. We are proud to share that February of this year, RCR was included in the Philippine Stock Exchange Index, or PSEI. In addition to this, RCR is also part of several major indices, such as the PSE Dividend Yield Index, MSCI, and FTSE Russell, thus enhancing its visibility among global institutional investors. RCR continues to strengthen its contribution to the group's consolidated financial performance, and in view of its growing relevance, we would like to share key highlights covering its financial results, portfolio composition, and total gross leasable area. In 2025, RCR contributed 11 billion pesos in revenues, representing 23% of RLC's consolidated top line. EBITDA was at 9.39 billion pesos, up 31% year-on-year, and net income was at 8.24 billion pesos, a 30% growth from the previous year. A result that is directly grounded in strong operating performance and sustained rental income. Net of minority interest, RCR accounted for about 41% of RLC's net income attributable to equity holders of the parent. By the end of 2025, RCR's portfolio comprises 38 premium assets, with 17 office properties and 21 malls strategically located across 25 key locations nationwide, with a total gross leasable area of 1.15 million square meters. Portfolio occupancy remains strong at 96%, while WALE, or weighted average lease expiry, stands at 4.02 years. Overall, RCR remains a key platform for RLC to monetize mature assets and recycle capital into higher growth opportunities, supporting balance sheet strength and long-term value creation. Following a strong 2024, the year 2025 marked a period of disciplined and reliable progress for RLC. Less driven by one-off gains, it reflects our company's business performance that is fundamentally healthier, anchored on recurring income, stronger operations, and a more resilient financial position. For the full year 2025, RLC's consolidated revenues reached 48.53 billion pesos, a 13% increase year-on-year. This growth was driven by the strong performance of both our investment and development portfolios, although our business is strategically weighted toward our investment assets, which account for 73% of our total revenue. The strength of this recurring base is further evident in our profitability metrics. Consolidated EBITDA reached 25.7 billion pesos, a 10% increase, with the investment portfolio contributing 82% of the total. EBIT stood at 19.62 billion pesos, up 11%, with 78% coming from our investment assets. Total net income grew 5% year-on-year, reaching 16.17 billion pesos, with 13.47 billion pesos attributable to the parent company. These results demonstrate the resilience of our business model and our ability to maintain consistent, high-level performance and sustained growth momentum despite shifting market conditions. Our investment portfolio remains to be the foundation of our stability, providing predictable recurring cash flows across our core segments. Malls and offices continue to comprise the bulk of this portfolio, contributing 41% and 17% to total revenues, respectively. Our hotels business delivered a strong performance, accounting for 13% of our total revenue. Our logistics business provided meaningful contributions to the top line as well. Meanwhile, our development portfolio sustained its recovery trajectory, contributing 27% of total revenues. The residential segment, in particular, saw a significant 71% increase in revenues, driven by the recognition of sales from prior years as more contracts reached equity thresholds, alongside the recognition of ready-for-occupancy unit sales. This balanced growth across our diversified revenue streams allows us to navigate the market with confidence while carrying forward positive momentum into the next phase of our strategic roadmap. Moving on to our business units, Robinsons Malls remains the group's largest contributor to revenues and a cornerstone of RLC's recurring income base. For the full year, malls' total revenues reached 19.67 billion, up 10% year-on-year, supported by strong rental performance. Rental revenues grew 11% to 13.94 billion pesos, driven by an 8% same mall rental growth and a sustained foot traffic across our portfolio. Profitability also strengthened. EBITDA rose to 11.82 billion pesos, while EBIT reached 8.17 billion pesos, representing 11% and 14% growth, respectively. With a strong nationwide footprint of 57 malls anchoring key urban and regional markets, our mall portfolio underscores the company's stability, scale, and reliability. Robinsons Malls spans approximately 3.3 million square meters of gross floor space and 1.7 million square meters of leasable area. This expansive platform allows us to foster deep tenant confidence and capture sustained consumer demand across the country. Operationally, the strength is evidenced by our 94% average occupancy rate, which remains ahead of the industry average of 92%. Last year, we completed 2 new malls that further expand our footprint in high-growth areas. The first is Robinsons Pagadian in Zamboanga, which opened in April and is currently 98% occupied. The second is the Plaza Bagong Silang in Caloocan, our newest community mall, which has already reached 100% occupancy. These new mall openings highlight RLC's ability to expand steadily into emerging and underserved markets with discipline. Beyond retail, our office portfolio remains a strong and stable pillar of recurring income. This business unit has a vast footprint of 897,000 square meters across 34 office buildings. Our operational resilience is evident in our occupancy metrics. Same office space occupancy stood at 90%, representing a 200 basis point improvement, supported by steady new tenant take-ups. Including buildings completed in the fourth quarter of last year, overall portfolio occupancy is at 85%. We continue to complement our traditional office offerings through WorkAble, our co-working office format. We now have 16 centers with an aggregate of 4,034 seats, providing the flexibility modern tenants require. Despite headwinds in the broader market and the office sector, we have sustained healthy earnings by focusing on well-located, high-quality developments and leveraging resilient BPO demand. For the full year, revenues reached 8.43 billion pesos, up 6% year-on-year. We maintained strong efficiency with EBITDA at 6.64 billion pesos and EBIT at 5.47 billion pesos, both growing 4%. This performance underscores the stability of our office assets and our ability to outperform the market through superior asset quality and strategic locations. Last year, we completed 2 new office buildings, GBF Center 2 in Bridgetown and Robinsons Cybergate Iloilo 3, which together added 93,000 square meters to our office holdings. During the same period, we further expanded our WorkAble platform with the opening of 3 new centers, 2 in Robinsons Summit Center in Makati and 1 in GBF Tower 2, Bridgetown, contributing 769 new seats. This continued expansion shows our strategy of enhancing portfolio stability through flexibility, allowing us to adapt to evolving tenant needs and sustaining occupancy and earnings across changing market conditions. Moving on to RLC's hospitality segment. It is distinguished by its multi-band platform, allowing us to serve a broad spectrum of travelers, from the value-oriented guests to the ultra-luxury segment. This diversity gives our hotel portfolio the adaptability to perform across varying demand environments. For the full year, revenues grew 8% to 6.5 billion pesos, supported by the solid performance of all of our brands. Operationally, system-wide occupancy improved by 100 basis points from last year to 67%, driven by stronger travel demand and higher guest volumes during 2025. Profitability also improved, with EBITDA rising 6% to 1.9 billion pesos and EBIT increasing 3% to 1.01 billion pesos, supported by better operating leverage. Importantly, around 71% of total revenues now come from our international brands and luxury hotels, reflecting our strategic shift toward higher-yielding hospitality assets. With the opening of NUSTAR last May, our portfolio now stands at 27 hotels with 4,309 room keys, further strengthening our presence in the hospitality sector. At the pinnacle of RLC's diverse hospitality offerings is NUSTAR Hotel Cebu, a 5-star property within the NUSTAR Resort and Casino Complex on Cebu's Kawit Island. Designed for the ultra-luxury traveler, the hotel features oversized rooms with panoramic sea views, private butler service, deep soaking tubs, and exclusive access to a private club lounge. It is also officially part of the Michelin Guide's curated list of recommended hotels, having earned recognition for its excellence in design, service, and exceptional guest service. Integrated seamlessly with NUSTAR's wider entertainment ecosystem, the hotel positions Cebu as a serious contender in the global luxury travel circuit. Finally, within our investment portfolio, we continue to expand our logistics and industrial platform. This supports the country's growing supply chain and e-commerce ecosystem. This structurally expanding demand positions our logistics business to deliver consistent long-term performance. In 2025, our logistics and industrial facilities delivered steady performance, with revenues reaching 890 million. Operational performance remains strong, with EBITDA at 809 million and EBIT at 592 million, demonstrating steady operating momentum. As of year-end, we operate 15 industrial facilities strategically located across key logistics hubs. Our portfolio now spans 329,000 square meters of gross leasable space, maintaining a high 94% occupancy rate. This high utilization highlights sustained demand and supports the continued growth and stability of our logistics portfolio. In the fourth quarter of 2025, we completed 2 new hubs, RLX Taytay 2 and RLX Calamba 2E, strengthening our presence in key logistics corridors to capture growing tenant demand. Moving on to our development portfolio, for the full year 2025, we generated 5.18 billion pesos in net sales from organic projects, alongside 3.11 billion pesos in sales from our joint venture residential projects. While net sales moderated during the year, reflecting broader market conditions, our residential segment continued to demonstrate resilience through disciplined execution. Realized residential revenues strengthened, increasing 36% year-on-year to 11.98 billion pesos, driven by prior year sales that reached equity threshold, the success of our programs for our ready-for-occupancy inventory, and steady construction progress. Profitability also substantially improved. EBIT rose 35% to 3.78 billion pesos, demonstrating stronger operating leverage as revenue recognition accelerated. In 2025, our destination estates generated 1.06 billion pesos in property development revenues, primarily from deferred land sales to our joint ventures. This performance yielded an EBITDA of 593 million pesos and an EBIT of 588 million. Beyond the numbers, we view this segment as a long-term value driver, with a pipeline of planned developments strategically positioned to ignite growth across key locations. These estates also showcase our unique ability to integrate our various business units, malls, offices, hotels, and residential developments into a seamless experience. By master planning these ecosystems, we create self-sustaining communities that maximize land value and provide unparalleled convenience for our customers. Under our new Sports, Entertainment, and Recreation, or SER business unit, we are expanding RLC's offerings to create richer end-to-end experiences for our customers while opening new growth platforms. Helios Pickleball Center marks our first flagship SER project in partnership with Cosmac Athletic Ventures Corp., and we broke ground last July at the Bridgetown Destination Estate. This is designed to attract around 1,000 daily visitors and host international tournaments. Helios lays the foundation for SER as a new experience-driven business stream. In 2025, our company deployed 18.88 billion pesos in capital expenditures. We adopted a disciplined approach with a focus on deploying a bigger share of our capital towards our investment portfolio. This ensured that capital was strategically directed toward expanding and enhancing our malls, offices, hotels, and industrial facilities, while still advancing high-priority residential projects and securing key land acquisitions. This prudent capital allocation has preserved our financial flexibility and strengthened our capacity to continue funding future expansions, ensuring that the company remains well-positioned to capitalize on growth opportunities as market conditions evolve. As we move into 2026, our direction remains clear. Through a disciplined phased development approach, we are better positioned to navigate today's uncertain operating environment, enabling us to advance toward our Vision 5-25-50 targets with greater prudence and lower risks, while prioritizing sustainable progress that enhance the quality, resilience, and reliability of our portfolio over rapid expansion. In line with our commitment to Vision 5-25-50, we are on track to complete key mall expansion and redevelopment projects in Bacolod, Dumaguete, and Manila, increasing total gross leasable area to 1,714,000 square meters through measured and purposeful investments that enhance customer experience while reinforcing the strength of our retail network. For Robinsons offices, we are on schedule to deliver Cybergate Dumaguete, a Grade A development aligned with the expansion requirements of an existing BPO tenant. Upon completion of this building, our office portfolio will reach 904,000 square meters, underscoring our disciplined demand-led approach to growth. Robinsons Logistics and Industrials, or RLX, continues to grow, with expected completions of Montclair in Pampanga, Calamba 3A in Laguna, and Sierra 3 in Cainta, Rizal, adding approximately 15,000 square meters, bringing our total gross leasable area to 379,000 square meters and sustaining momentum for RLX's long-term sustainable growth. In hospitality, Robinsons Hotels and Resorts will begin managing Summit Villas in Siargao, which is an 18-villa development of standalone units designed with private amenities and sustainable architecture, marking our steady expansion into high-potential destinations while remaining balanced with environmental stewardship. In closing, our expansion plans underscore a thoughtful and disciplined execution of Vision 5-25-50. By focusing on high-quality, demand-driven opportunities across malls, offices, hotels, and logistics, we continue to deepen recurring income streams while reinforcing portfolio stability and operational reliability. This measured approach allows us to have financial flexibility amid market uncertainty and positions RLC to capture larger value-accretive opportunities as conditions improve, allowing us to scale responsibly. With this, Robinsons Land is pleased to declare its highest dividend at 1 peso per share, translating to a 36% payout ratio, well above our minimum policy of 20% of recurring income, underscoring our strong and sustainable earnings capacity. This also demonstrates RLC's ability to continuously and consistently return value to shareholders while maintaining a healthy and resilient balance sheet through disciplined capital management. More importantly, it reinforces RLC's position as a reliable and trusted organization that investors, that Filipinos can confidently rely on over the long term. Grounded in years of disciplined decision-making, Robinsons Land stands today as a stable and enduring company, well equipped to navigate uncertainty and evolving market conditions. Our prudence over the years is now bearing fruit, reinforcing our resilience and positioning us to continue delivering better choices and creating shared sustainable value for all of our stakeholders. We extend our heartfelt thanks to our board for their guidance and to our dedicated employees whose hard work and commitment remain the backbone of our success. With your support, we will continue to move forward with discipline and purpose, delivering sustainable value for years to come as we leverage the collective strength and synergies of the Gokongwei Group. Our deepest gratitude goes out to our shareholders, business partners, customers, and communities for their trust and unwavering support. Together, we look forward to building the future of Philippine real estate. Maraming salamat po.
Thank you, Maybel. The chair will now entertain questions on the report.
Our first question is, given the uncertainty in the global environment, RLC seems to have remained very stable. What do you think has been the main reason for the company's resilience?
There. Well, I ascribe the company's resilience to a number of things. No? First is, of course, our prudent decision making, also our disciplined approach to execution, of course, our diversified portfolio, and also our being very intentional early on. We made a strategic pivot to focus on our investment portfolio so that we widen our recurring income base. We also decided to proactively pursue asset monetization through RCR. And then we kept our ear to the ground and we made a timely decision to tighten our inventory management for our residential business. And of course, we also pursued the premiumization of our key assets. This allowed us to also take advantage of better pricing and healthier margins. So all of these we put together in our Vision 5-25-50, which is the strategic roadmap we crafted precisely so that we are able to grow responsibly with strength and resilience.
Our last question is, RLC has maintained a strong balance sheet and continues to pay healthy dividends. Where is the company's cash flow coming from, and how do you plan to use it moving forward?
Yeah, so our cash generation is really coming from two sources, primarily from our investment portfolio, which provides us with a steady source of recurring income from our malls, office, hotels, and logistics businesses. We also enhance our liquidity through our capital recycling initiatives through RCR. So these cash inflows give us substantial financial flexibility, and we use this to fund our capital expenditures, pay down debts, and also to return value to our shareholders through healthy dividend payouts.
Thank you for your questions. The chair will now entertain a motion to note the report and approve the audited financial statements for the preceding fiscal year.
Mr. Chairman, I move that the report of the President be noted and that the audited financial statements for the preceding fiscal year be approved as presented.
Upon motion duly seconded, the report of the President is accordingly noted, and the audited financial statement for the preceding fiscal year are hereby approved as presented. We now proceed to the election of the members of the board. May I request the Corporate Secretary to read the names of the incumbent members of the Board of Directors.
Mr. Chairman, the incumbent members of the Board of Directors are Mr. James L. Go, Mr. Lance Y. Gokongwei, Ms. Rubina Gokongwei Pe, Mr. Patrick Henry C. Go, Mr. Johnson Robert G. Go Jr., Ms. Maria Socorro Isabel V. Aragon Gobio, and the independent directors are Mr. Bienvenido S. Bautista, Mr. Jose P. Pardo, and Ms. Mary Grace Po Llamanzares.
Thank you. The table is now open for the nomination of members of the board to the corporation.
Mr. Chairman, I nominate the following as members of the Board of Directors: Mr. James L. Go, Mr. Lance Y. Gokongwei, Ms. Robina Gokongwei-Pe, Mr. Patrick Henry C. Go, Mr. Johnson Robert G. Go Jr., Ms. Maria Socorro Isabel V. Aragon Gobio, and as independent directors, Mr. Bienvenido S. Bautista, Mr. Jose T. Pardo, and Ms. Mary Grace Paul Llamanzares.
Morning, Mr. Chairman. I'm Luis Cagara, and I move that the nominations be closed.
Second the motion, Mr. Chair.
Are there any objections to the motion? The chair hears none. The motion is carried and nominations are hereby closed. There being no other nominations, the secretary is hereby directed to cast the votes accordingly, and those nominated are hereby declared as the duly elected members of the board of directors of the corporation for the ensuing year until their successors shall have been elected and qualified. May I request the corporate secretary to read the names of the duly elected members of the board.
Mr. Chairman, the duly elected members of the board of directors of the corporation are Mr. James L. Go, Mr. Lance Y. Gokongwei, Ms. Robina Gokongwei-Pe, Mr. Patrick Henry C. Go, Mr. Johnson Robert G. Go Jr., Ms. Maria Socorro Isabel V. Aragon Gobio, and as independent directors, Mr. Bienvenido S. Bautista, Mr. Jose T. Pardo, and Ms. Mary Grace Po Llamanzares.
Congratulations to the duly elected members of the board. The next item on the agenda is the appointment of the external auditor of the corporation. The table is now open for nominations for the external auditor.
Mr. Chairman, I nominate the accounting firm of Sisip Gores Velayo and Company as the external auditor of the corporation for the fiscal year 2026.
I second the motion, Mr. Chairman.
Are there any objections to the motion? The chair hears none. The motion is carried, and the accounting firm of Sisip Gores Velayo and Company is elected as the external auditor of the corporation for fiscal year 2026. Let's now proceed to the next item on the agenda, the proposals to amend Article 2, Section 2 of the amended bylaws of the corporation as flashed on the screen.
Mr. Chairman, I move to approve the amendment of Article 2, Section 2 of the amended bylaws of the corporation to change the quorum requirement for board meetings from majority of the directors to 2/3 of the directors.
I second the motion, Mr. Chairman.
Upon motion duly seconded, the proposal to amend Article 2, Section 2 of the amended bylaws is hereby approved. The next agenda and the item is the proposed amendment to Article 2, Section 3 of the amended bylaws of the corporation as flashed on the screen.
Mr. Chairman, I move to approve the amendment of Article 2, Section 3 of the amended bylaws of the corporation to state that the written notice of date, time, place, and agenda of each board meeting shall be given to each director at least 5 business days prior to such meeting.
Second the motion, Mr. Chair.
On motion duly seconded, the proposal to amend Article 2, Section 3 of the amended bylaws is hereby approved. The next item on the agenda is the proposal to amend Article 2, Section A of the amended bylaws of the corporation as flashed on the screen.
Mr. Chairman, I move to approve the amendment of Article 2, Section 9 of the amended bylaws of the corporation to state that the corporation shall have 3 independent directors or such number as to constitute at least 1/3 of the members of the board, whichever is higher.
I second the motion, Mr. Chairman.
Upon motion duly seconded, the proposal to amend Article 2, Section 9 of the amended bylaws is hereby approved. The next item on the agenda is the proposal to amend Article 2A of the amended bylaws of the corporation as flashed on the screen.
Mr. Chairman, I move to approve the amendment of Article 2A of the amended bylaws of the corporation to amend the composition of the executive committee to 5 members to be elected by the board from among its members.
Mr. Chairman, I second the motion.
Upon motion duly seconded, the proposal to amend Article 2A of the amended bylaws of the corporation is hereby approved. The next item on the agenda is the proposal to amend Article 7, Section 5 of the amended bylaws of the corporation as flashed on the screen.
Mr. Chairman, I move to approve the amendment of Article 7, Section 5 of the amended bylaws of the corporation to state that written notice of the annual meeting of the company shall be sent to each registered shareholder at least 28 days prior to the date of such meeting.
Second the motion, Mr. Chair.
Upon motion duly seconded, the proposal to amend Article 7, Section 5 of the amended bylaws is hereby approved. The next item is the agenda is the proposal to amend Article 9 of the amended bylaws of the corporation as flashed on the screen.
Mr. Chairman, I move to approve the amendment of Article 9 of the amended bylaws of the corporation, that the Board of Directors may in any regular or special meeting amend or repeal the bylaws or adopt new bylaws.
Second the motion, Mr. Chairman.
Upon motion duly seconded, the proposal to amend Article 9 of the amended bylaws is hereby approved. Now proceed to the next item on the agenda, which is the ratification of the acts of the board, its committees, officers, and management of the corporation.
Mr. Chairman, I move that all the acts of the Board of Directors and its committees, officers, and management of the corporation from the period beginning from the last annual shareholders meeting up to the current shareholders meeting as duly recorded in the corporate books and records of the corporation be confirmed and ratified.
I second the motion.
Are there any objections? There being none, the motion is carried. Are there any other matters to be taken up?
There are none, Mr. Chairman.
The chair will now entertain a motion to adjourn.
Mr. Chairman, I move that this meeting be adjourned.
Second the motion, Mr. Chairman.
Are there any objections to the motion? The chair hears none. The meeting is adjourned. This ends the 2026 Annual Shareholders Meeting of Robinsons Land Corporation. A link where a replay of this meeting may be viewed shall be made available at the website of the corporation. Shareholders may send their comments or suggestions via the chat box on this meeting or by sending an email at the address flashed on the screen. Thank you very much for joining us.